Hi, this is Joe with Capitan Bank. Can I help you?
Hi, Joe. This is Tom Harchie with Integrity Capital, and just reaching out to speak with somebody there in your lending department that does commercial lending.
Well, you just happened to get the guy that heads it up. So,
Oh,
what can I
great.
do for?
Yeah, I'm reaching out because we're a commercial mortgage broker. We're based out of Scottsdale, but we have clients nationwide, and just looking to find proactive partners that can assist our clients with commercial lending needs. And just want to take a few minutes of your time to find out what you guys are lending on there at Capitan Bank, and if it might be a good fit that we can send some clients your way.
Oh, okay. So you guys are a commercial broker, commercial mortgage
Cor-
broker.
Correct. Yep, we're a commercial mortgage broker.
Yeah,
So.
we deal with lots of brokers. So we're definitely love to chat with you.
Oh, great. And as far as lending, we're over in Arizona. We work with clients nationwide, but what states do you lend in?
We are pretty much nationwide. We can go anywhere in the country. We do not do Nevada. But every other state we can go into. There are some states we might be a little selective on, construction, but for the most part, we can go anywhere.
Okay. Is it maybe some specific states you guys don't lend on construction, or is it
Yeah,
more often than not you don't do construction stuff?
uh, you know, like Mississippi is, in Louisiana. Uh,
Okay.
those are just tougher title states. So we tend to stay away from it. So.
Okay, I understand. All right, thanks. And uh, just major markets, or do you lend in smaller cities, or
No, pretty much anywhere in the country. So we can go into major and small markets as well. That's not
okay,
an issue at all.
okay. Good, thanks. And what sort of lending do you do? Is it conventional lending or um,
We do predominantly, I would say, the majority of what we're going to do is 7A lending. So SBA 7A
okay.
lending is kind of our MO. That's what we specialize in. We are a PLP lender. Um,
Mhm.
So, and for if you're not familiar with that, a PLP lender is a preferred lending partner versus a
Uh,
CLP, a certified lending partner. So we have the ability to make decisions directly in-house. We don't have to wait to submit through the SBA, Small Business Administration. So we have the capacity to do that in-house. So that allows us to be a lot quicker and faster and just better execution at the end of the day.
okay, so PLP lender, so you can lend. You don't have to go through the SBA to lend, or
Well,
how is
they
that
give us,
faster? Just so I
yeah,
understand.
they give us the authorization
Hmm.
to make the decision as opposed to having to submit to them and get approval through them. We can make that approval ourselves. We still have to fall
Oh,
within
okay.
the confines of what the SBA mandates in terms of their SOP language, which is standard operating procedures. Um, but yeah, we can make that decision.
Okay. Okay, interesting. That's good to know. Thank you. So you primarily do SBA 7A, um, so working really with owner occupied sort of properties, and you do construction. Do you do anything that's that's not tied to real estate, like equipment lending or business acquisitions?
Yeah, we can do with the 7A, we can do business acquisitions. So if there's no real estate involved, the 7A allows us to do those. And then we can also do equipment. We can do working capital with the 7A. So it's a very flexible and fluid product.
Mhm.
So yes, we can do all of those types of types of programs and products. Now with the 7A, if we do business lending, just understand that it's essentially going to be a shorter amortization. So we're not going to do a 25-year amortization like we would on real estate. It's going to be more probably 7 to 10 years, because it's just there's no real estate, so there's no tangible assets.
Okay, that makes sense. I understand. Now, so it sounds like you guys do quite a bit. You do construction, equipment, business acquisition. Where would you say the makeup of what you guys do? Is it spread evenly across those, or is business acquisition not really a strong suit for you? Or
I would say we don't do a ton of business acquisitions.
okay.
They're a little trickier because if it's a startup, that's hard. So we definitely don't do startups at all.
Oh,
I know
okay.
there's lenders who do, but we usually stay away from startups.
Hmm.
But it's harder when there's no collateral in a business acquisition because it's what we would call an airball. So we just don't have something to fall back on. But I would say the majority of what we do is real estate oriented.
Okay.
And that's what we're most comfortable with, I would say. That's an area that seems to just fit our box a little bit better.
Okay. That makes sense. All right, good. Thanks for going into detail there. And then, what sort of properties do you lend on there? Is there
Yeah.
anything that you guys really like or don't like to lend on?
Yeah, I would say pretty much everything. The areas that we probably are different than a lot of banks is that we don't have a problem with hotels, and we don't have a problem with gas stations. What would be considered special purpose
Hmm.
properties, which is just something that's more unique. Um, so I would say we can pretty much do everything. Obviously, we don't do marijuana facilities or gentlemen's clubs, things like that. But
Hmm.
outside of that,
Okay.
we're pretty open to everything.
So anything that's going to be owner occupied. Now you said gas stations. Do you guys like car washes too? I know sometimes
Yeah,
those go
yeah,
together. Okay.
we do. We like car washes. We do a ton of them, and so that's definitely an area that we're comfortable with the special purpose kind of car washes for sure.
Okay. Um, and then so yeah, you mentioned nothing that's kind of federally illegal there with the marijuana dispensary or
Correct.
clubs. Anything else you guys just avoid as far as will you do restaurants right now with kind of all the uncertainty going on?
Yeah, it's a good question. So I would say yes, with a little asterisk that, it just depends on how they've done. We expect that during the pandemic that there was going to be a lull or a dramatic drop in revenue, but we just want to see how they did before the pandemic and then how they're doing post. So we're not afraid of restaurants. We just need to understand what they do, if they're sit down, if they're drive through, what are some of the particulars about it that we need to understand. So I would say
Okay.
yes, we just need to understand the story around it, the location, management, et cetera, et cetera.
Okay, that makes sense. Um, and then as far as loan amounts go, I know the SBA tends to be about 250,000 minimum to 5 million. Is that kind of the range that you guys are in?
Yeah, the sizes are usually, yeah, probably 200, 250, all the way up to 5 million, because
Okay.
the max you can do on an SBA 7A is $5 million per one borrower. So what that means is that, one borrower they can only borrow, $5 million in total of outstandings at any given time. So,
Okay.
yeah, so that's the max.
Okay. That makes sense. And then what sort of loan to values will you lend up to?
Well, uh, on these loans, we typically are going to go to 90%. It's special purpose. We might go a little bit lower than that, maybe 85. I would say that, there's some instances where we will go up to 100%.
Mhm.
On certain clients that have really, really good income, really good cash flow. But that's the exception versus the rule. So,
Okay. And then when you're saying special purpose, what sort of properties do you consider a special purpose?
yeah, great question. So like bowling alleys, car washes, um, gas stations, hotels, anything where it would be a difficult proposition if you had to take the property back and we had to like repurpose it. That would be considered, special purpose. So, car wash,
Okay.
things like that would definitely
Okay.
fall in that category for sure.
Okay. And then when you say lower, is that how much lower do you normally go on the loan to value? Is it quite a bit lower, or is it just like a 5% or?
Usually 5%, typically,
Okay.
85% LTC loan to cost is, a pretty good number that we can go with. I mean, if, part of it too is if you may not know this, but, and I apologize, what was your name again?
Tom Hartshee.
Okay, Tom. So Tom, it's, when we do these, we always have to take, if it's available, we have to always take a secondary source of collateral. And so what that means, the SBA forces us, if there's equity in the client's home or if there's other assets, then we have to, like what happens. So for example, just to give you an idea, if a client's buying an office building to occupy, and let's say that he's buying it for $1 million, it's incumbent upon us, we are mandated by the SBA to discount that by 15%. Okay, so that's basically 150,000. And then what we have to do, so let's say that he's putting down 10%. Okay,
Mhm.
and that means he's going to put down 100,000, and we have to discount it by 150. Then we're going to try to find $50,000 worth of extra collateral, and more than likely in a home, taking a second, as if there's equity, at least 20% equity in the home, then we're going to take a second behind that as collateral. Okay.
Okay.
So just so you know, that it's important your clients understand that that's exactly what's going to happen when we are doing a loan. So it's, so nobody gets surprised.
Okay. And on something like that, do they have to use their home? Can they, if they've got other property, or what if they don't have any other property?
If they don't, we don't take it. That's the nice part.
Mm.
If
Okay.
if it's not there, we don't have to take it. If there's no equity in it, we don't have to take it. So that's
Okay.
the beauty of it, is it's just, if it's there, we have to. If it's not, we don't.
Okay. I see. Um, and then thanks for explaining that. I appreciate it. And then as far as the terms for repayment on the loans, what length are you lending? What
Yeah.
the term length are you lending for?
So the nice part, Tom, is that all these loans on real estate are 25-year amortization, and it's literally, the term is 25 years as well. There's no balloon, so they can go a full 25 years. Now we only fix it for 5. We won't really fix past that. Some groups
Okay.
will go, 25 years fixed, etc. We only go, But it just floats on prime. So we always use prime plus an index, the index plus a spread. So prime is the index, and then we take a spread, which is up to 2.75% is what we can charge. And then that gives you the all-in rate. So as the rates adjust every quarter through the Fed on prime, then that would adjust with it in the period of time when it was floating.
Okay. So it's prime plus spread or margin of up to 2.75. Typically, where are you seeing rates right now on the deals that you're closing?
Yeah, we're doing usually prime plus 1.5 to 2.25. I mean, that's kind of the range. Yeah, so I would say that's typically
Okay.
it's risk-based pricing. So the higher the risk, the higher it is.
Okay. I see, that makes sense. And I understand that. And do you do anything as far as interest only repayments, or is it always on a
Yeah,
25-year?
great question. We do interest only for construction,
Okay.
but then it just goes straight to a term loan after that.
Okay. Okay. Once the construction is complete. And then do you charge an origination fee? I know that the SBA has a guarantee fee, but is there any fee on top of that?
The SBA, yeah, so the fees are as follows. So there's what's called an SBA guarantee fee. And what happens is the government, the federal government, has a schedule that they use where they will, it's usually 2.5-ish, give or take, percent of 75% of the loan amount. And they'll take a fee that just goes straight to them. We don't collect it. It's just, we collect it, but it goes to them. And then we have like a packaging fee that's $2,500 that goes to us. And then, but we do not charge an origination fee, Tom. So there are no origination fees. So you guys can charge whatever you want. And just so you know, as well, and then third-party reports, whatever the appraisal, Alta survey, phase one, those are all separate reports that will need to be done, but those are separate from ours. And then there's some little $500 fee here and there just for doc and some different things, legal, et cetera, et cetera. But the nice part, Tom, too, just so you know, is we could actually charge, so we can actually pay you a referral fee.
Oh, okay.
So just so you know, we do that all the time with brokers, where because they bring the client over, that we can charge a referral fee and pay you, so you
Okay.
can make more money, and we can do that up to probably 5-6 points. So it's just just so you know.
Okay. Well, when where does that fee come from? Is that something that, is that impacting the client? We appreciate that, but we don't want to be in a spot where we're kind of just tacking on fees to our clients and, gouging them on the on it in the long run.
Yeah, no. Well, I would say this: we definitely charge. The pricing is increased when we do that. So we usually go about 25 basis points higher to pay you a point. So that's typically how the math works. Just
Okay. Yeah, that's something we appreciate, but probably if we can not include that, that would be better for
Oh,
us.
okay, yeah.
Yeah, we we normally have the way we work is we have a fee agreement with our client, and we just charge them directly. That way we're working for them. It's the way we prefer to keep it. But thank you.
Yeah, no, that's admirable. But yeah, and just so you know, um, just so you know, if you're charging a fee that the SBA doesn't allow you to get paid through escrow. So you'd have to get paid outside of escrow for that, because they don't allow it on the settlement statement. And then you also have to fill out a form. I think it's a section 159. There's a form that you'd have to fill out to classify how many hours you worked and kind of some of those elements to it. So just, and you'd have to get approved um, with us as a broker as well.
Okay, yeah. No, if there's like forms that we have to fill out for you to be an approved broker, we can definitely do that. We are we can, operate above board and make sure we fill out all that stuff. And yeah, that's paperwork we fill out with our clients, and understand we have a process for being paid outside of escrow. So appreciate you bringing that to our attention, though.
Yeah, of course,
Yep.
absolutely.
And then kind of to continue on fees for a little bit here, just one last question. Is there any sort of exit fee or like a prepayment penalty on the SBA financing?
Yeah. So the prepayment penalties for SBA 7A, Tom, are always 5% for the first year, 3% for the second, and 1% for the third. Just so you know that's kind of the way that the prepay. So it's, if you paid
Okay.
it off in the first year, it's 5%, second year it's 3%, third it is 1%. So,
Okay. All right. Great. And then no closing fee if they pay
yeah,
it outside of that, then okay, good to
right,
know.
right.
And then you had mentioned earlier that you're a PLP lender, and can kind of expedite that way. But can you just give me a little detail on the process if we've got a client that we want to have you take a look at and review? What's the
Yeah.
process to kind of get a term sheet, and then on the underwriting side, what's the timeline and what's expected on that?
Yeah, let me walk you through that, Tom. So it's a 60 days start to finish. It could be longer if the client's not cooperative, or construction typically takes a little bit more time because we need, construction plans and budgets and things like that. But I would say what would happen is you'd call me up with a little summary of the deal, talk to me about it. You and I would just chat over the phone a little bit about it. I would tell you whether I felt like it was a fit. I'd give you some general terms. You would talk to your client. If the client says, yeah, I like that, I'd issue a term sheet. Once you get it signed up on your side, we'd go ahead and submit as a pre-flight. The pre-flight for us is twice a week. So we do a pre-flight, make sure that everything's okay with the committee. We have about 4 people on the committee. I'm one of them. And then if we come back, then that term sheet's good to go. From there, we'll go ahead and start ordering third-party reports. So we'll get the appraisal, phase 1, et cetera. If there's a budget for construction, we'll get that. And I'll basically send out a checklist of items. Forms need to be filled out. There's a bunch of SBA forms you need to fill out, tax returns, pro formas, et cetera, et cetera. Once I get all that, then I'm going to prepare it for committee. So you work with the underwriter, who's in it. Her name's Janice. So Janice will do all the underwriting. That usually takes a couple of weeks. And then we go into a formal committee where we will present in that 2 weeks. And then Lord willing, everything goes well, they will issue a commitment letter. And then we start kind of plowing forward to a close. And then we usually get docs out usually a couple weeks after that, and move to a close. So it's pretty straightforward, fairly streamlined. There's not a lot of red tape. I've been here for, probably 15 years now. So I have a really good idea on what's going to happen, what's not, in our process.
Okay. So you've been there for quite a while. Are you? So I guess when you're starting the process with deals, I guess in the past year or so, have you been seeing any at all fallout with, just the underwriters getting a little more concerned over COVID changes and things like that, or how has it been looking for the past 12 months
Yeah,
there?
no, we slowed down a little bit with the PLP stuff or the PPP loans we did. But outside of that, no, we've been getting stuff done. We didn't really. I think we had one fallout that was like a restaurant that filed bankruptcy, but other than that, everything was really clean. We have a good process. I try to be very upfront with you and not waste a lot of time. So my yes is a yes. And I don't want to take you through a daisy chain. So yes, we're very nimble, quick. We're probably not the cheapest guy in the block, but we definitely get stuff done. I mean, I would say we're super high execution, at the end of the day. So that's,
Okay. Okay. Good. And then, if we've got clients looking to buy their own buildings, um, what are you looking for as far as like reserves on those? Do they need to, have like a 6 months reserve or a 3 month, or what do you guys typically look for?
yeah, well, I would say it's not black and white, but I'd say typically we want to see post-closing reserves of usually 3 months of payments. That's
Okay.
typically what we to see a client have for sure.
Okay. And is there, when it's going through underwriting, is there sort of a cash flow requirement that they're looking for the business to be generating? Is it a 1.2 times of the debt, or what does that look
Yeah,
like?
great question, Tom. So 1.2 times is our debt service coverage ratio, which is essentially the net cash flow underwritten divided by the annual payment. We have to have a secondary source of repayment, Tom, to at least a break even. So we
Mm,
look at their personal cash flow as well to make sure they're not bleeding. But I would say that's that's our standard sort of debt service coverage ratio. In terms of credit, they have to have at least a 640 FICO. It's kind of a standard. If they fall below that, we just have to have a story, but that's
Okay.
kind of our minimum FICO that we need in order for somebody to come through here.
And you mentioned that you had a deal fall out for a bankruptcy. Do you not allow any deals with bankruptcies, or what does that look like as far as like credit issues on bankruptcies, foreclosures, or a deed in lieu or anything like that?
Yeah, no, we're definitely story related. So as long as I get a good story for it and there was a good reason,
Mhm.
then I think we get it through. If it just feels like they walked away from the property and just kind of said pound sand, that's going to be harder sell for sure.
Okay, that makes sense. And then with it being SBA, I'm assuming that everything there is going to have a recourse to it as far as guarantor recourse. Is that correct?
Yeah, it is a full recourse loan for sure.
Okay.
Yeah, so
Okay.
we'll have to sign personally on the loan.
Okay. And can you for SBA, can you do anything as far as cash out for clients, or
Uh,
um,
we we can for cash out, it's a little tricky because there's some restrictions for those things, but we would just need to understand like what's it for. We can't exceed the basis. They have to have at least 15% in there, so it does get a little tricky to do cash out on 7A, I would just say, and especially for our bank too.
okay. Okay. Well, that covers the questions that I
Cool.
had. Is there anything kind of unique that you wouldn't mind, let me know about
I,
you guys as a lender, or any
yeah, I would
programs you guys
say
are running?
we are definitely known for like getting trickier deals done for sure.
Okay.
If you have something a little bit more hair, trickier to get done, that's definitely our MO. So we work well with brokers. We like to get quick response. So I would say that's our competitive advantage for sure.
Okay. Oh, good to know. Okay. And then if I could get an email address from you, and then that way
Yeah,
we can exchange contact information. I can, if you guys send out monthly or details on rates and programs you're running, I'd love to get in on a mailing list like that.
yeah. JFOO at CAPYTAN.com. That's my email. Obviously, you have the phone number, but
Yep.
definitely do that. I'll send you our kind of weekly rate sheet with some of the things we're doing. So
Awesome. Great. Well, I appreciate your time and the information you gave me, and I'll shoot you an email and we'll go from there. But thank you,
thanks,
Joe.
Tom. Have a great day.
You too. Bye.
Bye.